We're really going to dive into where he started in his 20s, the problems he went through, and how he has built a multi-million dollar empire, literally an empire of companies. You have to find people that are hardened through failure, hardened through times like this. And those are the people that you take advice from.
They think that if it's new construction, it has to be more complicated, and it's not. And it isn't that someone told me that, say, hey, knocked on my door and say, hey, Jerome, new construction is simpler than renovations. I've lived it. We've done so many retail centers that we've bought as value add, so many apartment complexes. We've retrofitted hotels into apartment buildings. And there's always so much unforeseen circumstances behind the sheetrock. There's so much money that's hidden back there that you lose by unforeseen circumstances.
What's going on, everybody? This is Chris Naugle, and I am here today with a rock star, somebody that started in the business of real estate in his 20s, went through trials and tribulations, and now is at the top of his game. He not only is involved in construction, but he also is involved in teaching people how to build just one house. And by building one house on one piece of land, making between $80,000 and over $100,000. That is such a simple thing for me to wrap my head around. And I'm sure it's a simple thing that you can wrap your head around. So you're going to love today's episode. Jerome Maldonado is from J. Jacob Enterprises. He's got lots of companies, but we're really going to dive into where he started in his 20s, the problems he went through, and how he has built a multi-million dollar empire, literally an empire of companies, and what he does today. So welcome to the show, Jerome.
Chris, thanks for having me. Appreciate the modest introduction, right? I appreciate you. Thank you for having me today and giving people a little rendition of what we're doing. And yes, you know, we have a ton of students that are coming in that are making over $100,000 a year just building houses. And real simple concept, kind of cool. I never thought that we'd be here, and especially teaching how to build houses and generate capital. At one point in time, I wanted to get out of the business thinking that there was always a better means. And so here we sit today, and it's been a great ride.
That's awesome. You know, and I know the ride has been long and I'm sure somewhat bumpy like most real estate investors. So, you know, the companies that you do today, so I know you own one of the largest concrete construction companies in your area, which is New Mexico, if I'm not mistaken, right?
Correct.
And then you have the education company. You also buy and develop ground up apartment buildings and commercial buildings. And now with everything that's been changing in the world, you know, where everything's kind of going more virtual, we're in the e-commerce world, you're looking at a whole different strategy, which I want to get to in a little bit. But is there anything else that I missed there in terms of what your business is today? Because I want to take that DeLorean back in time to your 20s. And I want to hear what it was like when you got started.
Sure. So we're pretty multi-diverse. We've been fortunate to be so diverse, even in such unprecedented times that we're going through now. They remind me even of 2008 and even the late 90s, where we kind of embarked upon unforeseen circumstances, which a lot of people that are young watching this podcast right now, they will embark upon some of this stuff in the future. You know, there's so much variables in life. And I tell my kids this in sports. I tell them, look, guys, get through the test of time, because that's the biggest variable. If you can be consistent over the course of a long period of time and continue putting in the time, you're going to succeed at whatever you're doing, because there's an attrition rate. People can't, one, it's very difficult for people to be consistent in what they do in life. And two, it's hard for them to do it over the duration of a long period of time. So if you desire something and you do it over the long course of time, inevitably, no matter what the bumps in the roads are, you'll get there. And so we, just like you said, Chris, there's been a lot of ups and downs in everything that we've done. But the good, for sure, by far, substantially over supersedes the bumps in the road. And we've been blessed. I mean, there's no doubt about it. We've been blessed in more than one way.
Jerome, you said something that I don't get many people that come on this show that they don't mention it, or maybe they're just too young. I mean, in today's world, there's a whole group of entrepreneurs, real estate investors that are literally in their 20s and 30s. And Jerome, you know, you're 48, I'm 44. If we really think about it, we're getting old, man. And although we've lived through the dot-com crash of the early 2000s, we also lived through the catastrophe in 2008, which was commonly called the Great Recession. And then I know for a fact we're going to live through yet another one here in the not so far off future, which I personally think in my space and my research is going to be the next Great Depression. But a lot of people have no clue what that even means. And I want to go back to, the early years. I went through dot-com. Now I was a pro snowboarder and I had snowboard shops, and I knew nothing about a recession. I only knew good times at that point. And then the dot-com crash happened. The planes hit the tower, and I'll never forget that moment because that moment changed everything. My business dropped 30%. I had to make changes. I ended up landing in Wall Street, and the rest is history. But what was that like when you saw your first recession, when you really didn't understand it? Maybe you've heard about it, but what happened in your life? And I guess let's start with the dot-com crash.
So the dot-com crash, we were going through Federal Trade Commission issues in the network marketing space. In 1997, we were in 1995. We were one of the fastest growing privately held companies in American history at that time. And it wasn't my company. I was an independent distributor with that company. And in 1997, the FTC came in and started regulating network marketing, direct sales, multi-level marketing companies. And we were one company that was affected by it. It took me I was in the company for 5 years. 3 years, I battled sucking at the business, just plain and simple. I was horrible at it. My 4th year in the business, I finally started figuring out the business, and I started making money, and I became one of the top money earners in the company. And in 2 years of making great income, we were pulled to zero. And so we're in 1998. I start a construction company, and the dot-com era starts, right? So the dot-com crash starts, and I'm investing in stocks. I start investing a little bit in real estate, buying single family homes in the late 90s. I start buying a piece of land and building them. And I remember exactly just like you. I remember being in my shop in the morning, employees getting going, and we have the TV going in the background, and we see the planes hit the buildings. And I was day trading at the time. I had you'll laugh at this, Chris. I had this little Nextel phone, digital phone, and I'm out in the field, and there was no smartphones back then. There wasn't even the little Blackberries at the time. And so I'm literally trying to day trade, like getting my guys going. I'm sitting on a Nextel phone going, trade, baby, trade, and I couldn't get the damn thing to trade. And finally would trade. And I was doing a lot of trading short. And I'll tell you, the stock market didn't crash in September of 2011. No. It was the following March. It was 2002. And so we day traded fine. We were doing okay. We thought we had kind of went through it. And then all shit hits the ceilings. And late February, early March, our short trades start getting forced to sell. And so we're just losing money, 5 figures at a time, 10,000 here, 20,000 there. And we're just starting to take blasts from Ameritrade, where they're doing forced sales because we're trading on margin. And so I get bloodied up a little bit. Thank God I had a cash flowing business, and we also had some real estate at the time. The real estate really didn't get affected that hard at that time in where we were. We were still a small player in the field at that time. We had one small retail center at that point in time. Plus we had 4 single family homes, and those were fine. But the stock market, we got blasted. And so obviously, we made some changes, and then we from there we kind of scaled up. It was 2008 where we really got bloodied up. 2008 was brutal. We probably had a net worth of about $20 million at that time. And I thought we were sitting on high haven, right? My wife and I, we did. I mean, I thought I was I thought I was just the real estate and business guru at the time. I thought I was, I remember even telling myself, the more money you make, the more money you make. The old saying, that the more you make, the more you make. And I thought I was the reason, that I was the omni business person of all gods, and I figured this game out. And little did I know that there was a perspective in this business world that was outside of my control, and I was very vulnerable to it. And so, I got sloppy. We were going out, we were buying real estate. I was buying raw land. I was building retail centers, and we had subdivisions going on. What saved us was the fact that we stayed debt free in our single family homes. I had enough cash flow, and we had never drawn on that. I'd always, because of what we went through in the 90s, I'll tell you that was my saving grace. When we lost everything, when the FTC shut us down, I lost my house, I lost my Range Rover. I was just a kid. I was buying a bunch of dumb shit at the time. But in spite of that, I learned something. Not to be buying dumb shit when you haven't really achieved what you're supposed to get to, right? I didn't want to go through that again. So I had created a lifestyle, and the viewers will like this. And it's kind of a Dave Ramsey thing, right? It's kind of the opposite of what I do now. But at the time, it seemed like the smart thing to do. I wanted to create a lifestyle that no matter what happened, no bumps, whatever bumps in the road I created a lifestyle where I could live off of $4,000 a month. Okay. And where that came from was I went back to school in 1998. I had one year left to get my pharmaceutical degree. I was in pharmacy school prior to my network marketing days. And even in my early network marketing days, I was doing both. I was moonlighting in both. And I figured, well, shoot, if I got my degree, I can live on $4,000 a month, right? Like that was my worst case scenario. And so I figured, let's have a run at this business stuff again. And if all shit hit the fan, I could live on $4,000 a month. And so I followed that business model. Even to this day, my personal bills are less than $4,000 a month, and we've lived modest. We live a great lifestyle. We buy our cars cash. We don't create bad debt. We create good debt, assets that produce cash for us. And so when 2008 hit, we were in a very good spot in regards to how much debt we took on our personal side. But we had also started leveraging good debt to build out big retail and offices. We owned cash. And so with the subdivisions that we owned cash on, we were able to sell off those homes. We sold them off a little slower, but we were still able to sell them off. But the retail centers, we had to service debt, and I called it trash can money. Every month we were just throwing money in the trash towards interest payments. And then we had banks that stopped funding us on these projects. And so we started seeing our bank accounts go from a few $100,000 down to a couple $100,000 to a single $100,000 down to 5 figures. And we had more outgoing cash each month than we had cash flow coming in. And there was 4 months of that. We had December of 2008, January, February, March of 2009, and then April of 2009, we started cash flow positive again by a small margin. But we changed our business model. It took us about 3 months to pivot aggressively, and then about 30 days of hard, aggressive pivoting to really start pulling in profits again. And by the hair on my chinny chin, Chris, we got through it, and we started actually purchasing real estate again in Phoenix in May of 2009. Small, little $20,000, $25,000 purchases, but we had a lot of those. And that little tiny time, that little tiny point in time, we spent about $900,000 in buying little fourplexes and little single family homes, a portfolio of 12 single family homes and a portfolio of 64 units of fourplexes. And those assets have turned into $15 million worth of assets in today's world. Right. So wow. $900,000 to $15 million. Pretty cool little acquisition. At the time, it didn't feel that way, though. At the time, I just felt like I was buying stuff to just service debt and get myself out of this hole I had dug myself into.
Wow. Let me interrupt real quick. Folks listening, I want to be very clear about something. You're hearing a story from Jerome of, from the 1990s, mistakes he made, the lifestyle, the Range Rovers, all the things he was buying. He made more, he spent more. And then all of a sudden, when it all went away and got stripped from him, he started looking at things different. That's called wisdom, folks. If you're going to take advice from somebody and you're going to learn from somebody, I always tell people you either invest in things that you know, like, and understand. Okay, this is the third law of wealth. I want to be clear about this. This is a law of building wealth. It's called protect your wealth. And you do that by investing in things that you know, like, and understand. Or number two, investing with people that have the knowledge through time, wisdom, and failure. So if you were to literally decide who you wanted to hire as a coach or who you wanted to invest with, you should have a checklist that hits all those. And with Jerome, you'd check all those boxes. He's failed. Boom, check that one off. What did he learn? To be ultra conservative, to the point where literally he felt like he was being too conservative. And he was always, like when we grew up, I grew up in a lower middle class family. It was always shut the lights off. We're not heating the outside, right? You grow up with that scarcity mindset that came from living in a hard time. And we live in easy times today, folks. Very easy times. You don't know this. Most of you listening might be younger. You have no clue what's coming because all you have ever known are easy times. Jerome's talking about hard times. And there's a book that was written by my late friend, Stefan Arnio, and it's called Hard Times Create Strong Men. And it goes back through history, back to the Roman times. And it talks about periods of easy times and how those empires ended and those people got decimated because they weren't used to hard times. You have to find people that are hardened through failure, hardened through times like this. And those are the people that you take advice from. Those are the people that you work with. And this knowledge that you're getting right now means nothing, folks, until you apply this knowledge. I'd say that all the time. It's the application of knowledge that matters, not the knowledge itself. If you're listening to this, go back to the beginning and listen to that journey because there was so many golden nuggets in there and what happened to Jerome, how he failed, then how he picked himself back up, how he operated with zero debt. Now, most of you are like, well, that's stupid because right now money's cheap. And it is. But he was doing it because he had already failed and lost it all and he didn't want to again. And it served him well. There is good debt and bad debt. And all of you should read the book, Rich Dad, Poor Dad, then follow it up with one of my books, Mapping Out the Millionaire Mystery. He's talking about good and bad debt. Read this book, Mapping Out the Millionaire Mystery, and you can get it for free by going to chrisnaugle.com just for listening to this. That book explains how every wealthy family throughout history has done what Jerome's done. And they've all learned because they've failed. So apply knowledge. Jerome, I didn't mean that for that interruption. Let's continue on with this story. So we got through 2008 all the way through today, but let's really kind of get to today's operations. And then what I want to do after we talk a little bit about, this concept that you teach, because I think the biggest thing people need to wrap their head around, a lot of people come on here, they're in syndications. They got hundreds of millions of dollars worth of apartment buildings. That's not realistic for somebody just starting out or just doing a couple. But what is what you teach? Buying a piece of land, doing a spec home or building a home on that and making $80,000 to $100,000. That would change a lot of people's lives. I like that too, because we do a lot of stuff. We've done hundreds and hundreds of flips and I've hated every one of them. But if I could have just focused 1 year on doing one project, putting my heart and soul into one thing and learning a lot about it and making 80 to 100 grand, boy, that would have served me well back in those days.
Yeah, it's been great. I didn't realize what it was going to do for us back in the days. And I didn't realize that would be something that people gravitated to. I thought it was like you said, all the big stuff. I thought, we're building these $30 million apartment complexes. I got 3 of them going up under construction right now that are ours. We build and hold. But that stuff is not mentally comprehensible by most people. It's they can't even understand how to get into it. And there is a barrier of entry to that stuff. But it's feasible. And what I tell people is I said, what if the worst case scenario was that you had to work a little bit and instead of pounding the phones trying to wholesale or going out and having unforeseen variables and fix and flips, which I hated. I did it too.
I hate it.
And I hate it. It's just the variables and the margins were so compressed that every time I got into a fix and flip, I absolutely hated it.
Jerome, it's like when we started this, I told you I was having a bad day. I'm having a bad day because I got a call from our plumber who he's at one of the flips we're doing right now. And he just unleashed just a whole laundry list of about $10,000 worth of unforeseen things that the customer will never see, never understand, that have to be done because of freaking building inspectors. So I love that you mentioned that. And just to get it right out in the open, because it makes me feel better to know that I'm not the only one that suffers in this stupid world of fix and flip.
Yep. And that's the whole thing. Because I always tell people it's so much easier. And most people don't wrap their head around the fact that they think that if it's new construction, it has to be more complicated. And it's not. And the reason that and it isn't that someone told me, I say, hey, knocked on my door and say, hey, Jerome, new construction is simpler than renovations. I've lived it. I've done them. We've done so many retail centers that we've bought as value add, so many apartment complexes. We've retrofitted hotels into apartment buildings. And there's always so much unforeseen circumstances behind the sheetrock, right? There's so under the concrete and behind the sheetrock, there's so much money that's hidden back there that you lose by unforeseen circumstances, that when you build new, it's very transparent. Your expenses going in. And so there's a process to it, obviously, like there is anything. But once you learn that process, it's very transparent. And so your profitability is very transparent from the get-go. The only variable is if we go into a compressed market. So I teach people about that because we lived that in 2008. We saw what a compressed market could do, and lo and behold, Chris, we lucked out. We were in a really good business model. I didn't know it at the time, but I learned it since, that the sector that we build in is protected by the most stable asset class, and it's older money. People like our moms and dads, people like our grandparents, who they're not working a job anymore, depending on the economic circumstances. A lot of them are on fixed income. They've either sold a piece of real estate and they retired, and it's money that they've deployed from a different state. But a lot of empty nesters, and then also upper middle class affluency. So we're not hitting like the bottom demographics. We're hitting just above that. But we're not hitting the $1 million home mark either, where you're trying to get the more affluent people that are buying million, $2 million, $3 million, $4 million homes. There's money to be made there, but that market sector is a little bit riskier. So we just hit in between that $500,000 to $800,000 sector, and it's been a very good market sector because the largest profitability sits right there in the most stable asset class and demographic class that's out there. And so if the market compresses, there's enough profitability that, like I tell people, would you hate me so much is if we stay in a good market, you make $130,000 on the house, or if we go into a compressed market and we lose 20% of the value and you only make $40,000 on the house, are you okay with that? And that's my question to them. And they go, yeah. And I say, okay, then let's go. Because even in 2008, when everything else was taking a shit on us, the worst house that we sold, we made $38,000 on. And this because we had to renovate the kitchen because we jacked up the countertops and how it sat in going into the breakfast nook. And the other one we made $43,000 net profit on. And we didn't even know that we were going to go into this, and we were negotiating low. And those were the two worst profitable homes that we've ever built in over 20 plus years. Wow. And so when I sit back and I look at it, every other house we've made either $80,000 to $150,000 on in that asset class. And now we're making a little bit more profitability because the market's just silly. We're doing those same homes we're making $170,000 profit on. But I tell people, don't focus on that. Focus on something realistic. It's your first home. There's a barrier of entry. There's a learning curve. You're going to make less than we make. You're not as efficient as we are. But imagine if you can go out and instead of pounding phones 10 hours a day to do wholesaling, or you go out with to do a fix and flip with maybe a $40,000 profitability, and you open up a wall and $10,000 of that gets sucked down, and now it's a $30,000 profitability, and it takes just as much time. Because how long is that fix and flip going to take you, Chris?
I don't know, 2 months. I mean, it's a simple one, but the simple ones are always the pain in the ass ones because everything that can happen goes wrong.
Yeah. So a new build, once you get your permits, is going to be a 4 to 5 month build, right? So 5 months. You make $100,000 and you can foresee the variables, and you create a pipeline, so you're working on your next house, you're permanent in your next house as you're building the house you're working on. And so if you revolve this and you do one a year and you stay working your full-time job, I show up to my builds probably about 3 to 4 times a week, maybe. And I'm there on average between an hour to an hour and a half. So they take me about 5 hours a week to 6 hours a week. Realistically, to turnkey a build. Now there's integral pieces of that where I have to be on site slightly longer certain days, but on average, I'd say it takes us less than 10 hours a week to facilitate a build. So anybody working a full-time job can do that. They can go in and get boots on the ground at 5 o'clock in the evening when they get off. And then they can take that money, if they want to scale it where they're doing 2 or 3 of these a year, they make $200,000-$300,000 a year, do that for a year or two. Now you're starting to have some revenue. Live off the income the problem, Chris, is that most people get excited. They go buy a Mercedes Benz, spend $100,000 on a stupid car, and that doesn't make them no money. They go and scale up from a $400,000 house to $1 million home, and they buy dumb shit. And I tell people, don't go out and buy yourself a $25,000 Rolex yet. Set some milestone markers for you. Like every watch that I own was purchased from a milestone that I hit. I'll set a goal. I'll say, okay, when I stabilize this entire asset and it's cash flowing, I'm going to go buy me this $50,000, Hublot or whatever it is, and then once I do that, I set those benchmarks. Then it releases those dopamines of success where it's more of now it's something that it's a reward for reaching a milestone that you wouldn't have reached without setting that goal. And so in that frame, buying dumb shit is okay because you're just using it for a small little piece. But initially, reinvest that money and deploy it into stuff. And because the real game of real estate, Chris, as you know, and I know a lot of your viewers that are following you, you run an incredible podcast and you bring some incredible guests on here. One of the things I tell people is you set yourself up where you never pay taxes, take that money and then deploy it into an asset, a long-term holding where we go in and where you go in and you depreciate that asset, and now you have the tax write-offs from that asset, and you don't have to worry about paying taxes on all that asset. You do tax deferred income.
I love it. Yeah. And one of the things we teach is the infinite banking concept. So if you just change one thing and that's where that money starts, and then you move it from there, now you've also turned on uninterrupted compound interest. So everything you're saying resonates. I love assets. And, one of the best things that's kept me from paying a lot of taxes in all these years since 2014 has been real estate. We make great money, but the real estate has always been that depreciable asset that has made it so that we don't get hit with these massive tax bills. So anybody that's starting to make money, you need to understand that this is why all the wealthy individuals out there, all of them are in real estate, whether they want to be direct, go into the sites every day, or indirect through syndication models or just passive models. They're all owning real estate for that sole reason. They've got good counsel, they've got good CPAs, and they all say, you need to get into real estate or you need to set up a foundation and some trust. That there's only two ways to do that. But one of the things that I love, and I want to continue down this is, because it's such a unique model, is a single home, this building a home. We've all seen builders and we think that's untouchable, but realistically, like when you break it down to let's just do one house, it involves buying the land first. Okay. But you can, even like some nice neighborhoods, you can get lots depending on where you're at in the country for 100, 100 and a half. Sometimes you can get them as low as 30 grand. So let's go through the kind of walk through that real quick, because it's going to be too much for this podcast to really dissect, but you guys teach this. So we'll put the links up to tell the audience if they're interested in learning this, how to get a hold of you, because it is, I'll tell anybody, like wholesaling, flipping houses. We've done that. Even the rental side, I've done all of this to a pretty, high degree. And Jerome, you're far above us, but like all of it just drives me nuts. It makes my hair turn gray. It's, you're dealing with tenants, termites, and toilets with the rentals. You're dealing with people not paying when the pandemic hit. You're dealing with the fix and flip nightmares, which is, I think, the worst thing you can do in real estate. And yet that's the one thing I've done the most of. And then wholesaling, you're just creating a job for yourself, folks. You can make a lot of money in wholesale until you're not making a whole lot of money because it's transactional. Once that thing stops and you don't have a deal to sell, today, the world of wholesaling is so bizarre to me. I don't even understand it. You have wholesalers wholesaling it to another wholesaler, wholesaling it to another wholesaler, selling it to the end buyer. And the only reason that exists is because you got hedge funds out there that are willing to pay 120% of value because they're trying to move money out of Wall Street because they know what's coming. But that's going to end, folks. So you like all these wholesalers that are buying the Rolexes, driving the Lambos, flaunting, acting rich. They're going to be the next poor ones because you're violating all the laws of wealth. I mean, listen, Jerome, I'm listening very intently because I love to hear this. When you find somebody that's high net worth and has made it through failure, you understand, you see that they've learned the laws of wealth, whether you know what the 6 laws of wealth are or not. You are literally preaching them as you're going through your story. And one of the laws of wealth that you talked about is, people seeking unrealistic returns. When you seek unrealistic returns, your money flees you. And not only that, you started talking about, people violating law number 2 of wealth, which is your money must work for you. When you make $40,000 or $100,000 on a flip, don't go buy the Rolex. Don't go buy the bigger house or the bigger car. Take that money and put it to work again. Because every time your money goes to work for you, it creates offspring in the forms of interest, dividends, or profits. Then you take a little slice of that and you maybe live a little bit better life, but you do it over time. Everybody right now, Jerome, is literally sprinting their way to riches. And building wealth is a marathon, man. You've been at this since the 90s. I've been at this since Well, I guess if you really go back to the beginning, 1994. So, that's a long time. And a lot of people can't wrap their head around it, but that's just what it takes. Like, you want to be wealthy, it's going to take time. You want to be rich, go do what you're doing. But, just understand that rich means the next poor. So let's go into what would this look like if somebody wanted to build a house, we don't need to get into all this stuff because you can teach them that in your coaching program, but would they have to have the capital to buy the land? And what does the money instrument look like?
So we have a lot of affiliates, right? So there's a lot of variables. Everybody's a little different out there. And that's one of the biggest concerns with people with bad credit or the lack of funding. And so what I've always told people, there's a barrier of entry, and let's take a worst case scenario, Chris. Bad credit, no money, right? That's the worst case scenario.
That's about it.
Everybody outside of those two sectors, you're at a good place, right? We can find funding for you. There's buying the land is not an issue. The way you have to understand, one, financial institutions and how they work, right? What they're after, they're protecting their assets. They're just like investors like you and I, Chris, but they're on a bigger scale, right? But they're protecting their money and they're dispersing it and they're liquidating it in large quantities and in multipliers, and that's how they compound their money. And so what you got to understand is they're limiting their risk. So you have to function and think almost like an institution, like a bank, okay? When you're looking at any piece of real estate, doesn't matter if it's a large asset or small asset. So let's take a look at bad credit and no money, for example. Okay. So the way I would tell people is when I first got started in real estate, there's what's called owner financing. And so a lot of land out there, because land is worthless to a bank. Banks don't want land. It's not cash producing. It's a high liability. There's no ROI on it. They have the asset of the land, but really it sits there, right? Like I still have over 40 acres of land, and I think it compounds down to like 62 lots that I own still to this day, pre-recession. And at the time, I really honestly thought that land was running out. Like I thought that there was going to be a shortage of land on this earth. And I literally felt like that, as stupid as that sounds. And so I bought all this land up, and then the recession hits, and then the progressive growth plan city I'm building in completely shifts. And so here we sit, almost 15 years later, and I still own all that land, and I can't build on it. I mean, I can, but my ROI just isn't as good as it is if I just go buy new land someplace else. So what I tell people is, don't go buy dumb land. There's lots out there, and there's people that are sitting on these lots, and they'll owner finance it for you. And so what you'll need to finance is one, you get the seller to pay for the survey for you, but then you have to get a topographic survey. That's the lay of the land. You got to get an architect to plat the house for you, and in some municipalities, a civil engineer to do the grading and drainage plan for you. And now you can go get your permits, your building permits. Okay. Now, there's money in entitlement. And what people don't realize is that in any project, both commercial and residential, when you take a naked piece of land and you entitle it, some people are sitting back going, "Hey, Jerome, what's entitlement? What does that mean?" Well, entitlement is when you take a piece of land that's just dirt and you put something three-dimensional to life on that lot. You put a building, you plat it. An architect plats a building on that lot. They give you the dimensions, the vertical construction, the structural stuff, the electrical plans, everything. And you're able to take that now to go give it to the city for building permits. So when you do this and you give it to the city for building permits, now the banks are looking at it and they go, okay, we have something to appraise. Okay, so now the banks have something tangible to go after and appraise. Now you have something of value. And so your land now has literally almost doubled in price. And so we'll even do this through the means of syndication, Chris, where we'll buy, we're in the process right now. We just tied up a $3 million piece of land in Tucson. And I told my business partner, I said, look, Kyle, let's not even raise capital. Let's just take down the land. Let's work on our entitlements. Let's do a delayed close. Let's entitle this, because then we can go out to the investors, and the land value entitled is worth $6 million. Now our equity stake increases, their equity stake decreases. So we're giving up less of our equity because we've done the entitlement process. Same thing with buying land and building houses. When you go in and you entitle the land, you get your permits and you have it permit ready, which will only cost you a few $1,000s. You can borrow that from grandma, grandpa, mom, dad. Everybody has a little credit card with something on it, 10 grand on there. You can go get that stuff done for a few $1,000s. Now you can go to a bank and a financial institution. And for
those of you guys who don't have good credit, there's hard money lenders that are backed by institutional money. They care less about you and more about the project. So what you have to become good at is having a good deal, vetting a good deal. So there is a barrier of entry, but Chris, you can't be a piece of shit. And what I mean by that is if you have bad credit and you don't have money and you're also a piece of shit, meaning that you have no work ethic, you have no abilities, no talents, you're probably just screwed. You should probably go get a job at McDonald's. Okay. Plain and simple. But if you've had a bad run, you went through a divorce, you maybe made some bad business decisions, which we've all made. My credit score's been a 480. I've had jacked up credit. It was outside, it was in my control, but outside of my control. I was trying to build a business, right? And I ruined my credit. So for those of you guys who've had a bad run, don't have money, something bad in your life has happened in regards to maybe some bad decisions that you made in business, but you're a good person, have a good work ethic, and you're wise enough, have some common sense, you can do this. Because there's institutions like we work with a company called Genesis, and there's 3 other ones, and they're backed by companies like Goldman Sachs and other lenders that'll give you a loan. You're going to pay an increased premium. So the reason I quote 80 to 100,000 as opposed to like the 170 to 150 that we're making now is you're going to give up, $20,000, $30,000 of that and paying high interest payments on your first build. But if you do, and you get through it and you give up a little bit of that equity to these banks in interest payments, and now you have $80,000, are you better off today than you were a year ago? And that's the question.
That's a good question. And I think that's just wonderful. And anyone looking to get into real estate, folks, you got to look at this model. I mean, there's nobody else that I've had on. There's people that are building and developing, but nobody teaching this simple concept. I mean, I don't care who you are. He just said, if you got no money and no credit, like he just told you, you can get into this. Like there's ways to do this, which should open up a lot of hope for some of you. And for some of you that are just burning it and spinning your wheels, wholesaling and flipping houses, maybe you're just like, well, maybe this is a better way. It seems like a lot less stress. I mean, you're dealing with one project, one set of contractors on one site. Boy, that's like music to my ears. So with that, Jerome, I want to just kind of finish off this podcast with one thing, and that is, what do you see coming in the markets?
Market's going to compress, Chris. I mean, we've never, this is historical. We've never seen a market this stimulated for this extended amount of time. We have all kinds of variables happening around us right now between the war between Russia and Ukraine. We still, there's a new variant of the COVID virus that's coming out of China. There's all kinds of stuff going on. And so I always tell people, I don't know what it is that's going to compress the market. There's so much, if we knew what it was, we'd fix it before it happened, right? So there's unforeseen variables. And so like even this deal that we're taking down in Tucson right now, when we started underwriting it, I told my partner, I said, look, man, we got to underwrite this at a 10% compression. Right? Like right from the get-go. Let's assume that the market's going to compress, rental rates are going to compress by 10% right off the bat. And so let's underwrite this. Let's get the numbers the brokers are giving us, and let's depreciate that by 10%, and let's underwrite it at that number. And if it works, then great. The other thing is, like, they were asking me to underwrite it at 3.5% cap rates. I said, no way. I said, The feds are increasing rates. Cap rates exponentially have to go up with interest rates. You can't continue buying it's sub 4% cap rates and interest rates are over that, right? Because then now you're servicing debt over your cap rates. It can't happen. Cap rates collectively have to go up with interest rates. So we're doing stuff, we're underwriting stuff now at 5% cap rates, right? Interest rates are going to get there. It's just a matter of when. And so
7 times this year, they're going to raise rates 7 times. The first one was yesterday, and now they're doing another 6. Like, do the math, folks, 0.25% at a time. It's not going to be pretty.
Nope. And so, and in spite of that, money is still cheap because, Chris, when I go back to even the recession, we were still paying on commercial loans 6.5%, 7%.
Heck yeah, we were. It's like that was cheap back then. It's like we're living in a balloon right now, in a cloud, like thinking that this is normal. This is not normal. This is the government trying to do what they're doing and keep us at an ultra low interest rate, because that's all they got. They're running out of bullets in the gun. The only thing they got is interest rates, pump and print money. And once all that dies, well, it's back to there's another variant there, whatever angle they want you to look at. Like that's what they're going to do. And they're running out of them, folks. They're running out.
Yeah, I remember when 8% cap rates were like astronomical. It was like, damn, I can get this in an 8 cap, and anything lower than that was just unforeseen. It was just like how in the world are people going to afford this? Now people are paying sub 3% cap rates. So you got to underwrite things wisely. It's coming. And here's the thing, right? So like you underwrite it conservatively, the numbers don't work, don't do the deal. You underwrite it conservatively, the numbers work, and you're okay with the numbers, and you do the deal, and we're still ahead of the game, and the market doesn't compress like I'm talking about. Well, then great, good for you. Pat yourself on the back and take the money and run, and take the asset, the equity, and everything else that comes along with it and run. But the market's going to shift. I mean, there's no and ifs or buts about it. So like when we're even teaching our buy land, build house models, that's why I always ask that question is like, if the market compresses and you only make 40 grand on this house, are you okay with that? Because my whole point being is like, I'd rather do that than buy a fix and flip like I did in 2006, 7, and 8. And then the recession hit and I made zero money on every fix and flip because I was selling them. And thank God I was a broker. I was able to sell them without having the 3% commission and they were a wash. I just scrubbed them off my books with zero profit, month's worth of work, zero profit. But I can't say that with new homes. I was able to make a profit on them. And so as long as things don't get worse than they ever were at our historical down point and worst economic downshift, which was 2008, we'll be okay, even buying land and building houses. So I always tell people, if you follow our business model, are you okay making a third of what I'm telling you could make if the market does compress? And if the answer is yes, I'll say, okay, then great, then let's roll. You know?
I love this stuff. This is great. And I knew through this whole thing what your answer was going to be to that question. I just wanted the audience to hear it. You see, folks, I said it earlier when I interrupted, it's wisdom. And it's the one thing that seems to be lacking out there in the marketplace right now. Everybody is just shooting for the moon. Everybody just thinks this parade's never going to end. And they keep going at it. I even did a poll on a couple of our Facebook groups with thousands and thousands of people asking them that very question. And most people seriously don't think that it's going to end. They think that it's just going to keep going up. So they keep plowing money into the stock market and buying risky assets because they're scared of holding cash because inflation's, almost 8%. That isn't your concern. That isn't your fear right now. Inflation should be one of the third or fourth things on the list. The risky assets are going to blow before inflation takes you down. Yes, your money is depleting at the rate of deflation, but everything in life is temporary. Inflation, where it's at, is temporary. They're raising rates 7 times. That'll do a little bit of a stint to the inflation numbers, and then that won't be the issue. And then it'll be on to the next thing, which will be one you don't like when you're holding risky assets, called deflation. Look it up, folks, because that's what's coming. And Jerome knows it. Anybody that's got the wisdom and has been through the times like what we're going to come, and we don't know what's going to come, but it's going to be a mixture of all those different periods of time. 1929, the Great Depression. It's going to be a mix of the dotcom crash with these crazy techs. And it's going to be a mix of 2008 because we do have a real estate speculative bubble happening right now. So folks, I hope this was valuable for you. Jerome, this course that you teach, honestly, I wish I could have you on every month to talk about this because this is what people need right now. So how do they learn more about your coaching program on this building new homes?
So I'm real easy to find. My name is in the podcast, obviously. Just Google me. And we have ads running all the time on Google and also on Facebook and on YouTube. And if you just go to my YouTube channel, the links are in there. If you go to our Instagram channel, in our highlight section, the links are in there. If you just go to jeromemaldonado.com, our ULR is just jeromemaldonado.com. The links are in there as well. Real easy to find. You guys can just Google me and I'm all over the place. And you can just click, there's calendar links that you guys can schedule a call with my team. They'll educate you, tell you a little bit more about it, how you can work with us and different options and different ways and different levels you can work with us. But we're real easy to find, Chris. Just Google my name and put it into any platform on there, from Twitter to Facebook to Instagram to YouTube, and I'll pop up real easy.
All right, Jerome. Well, thank you so much for your time. And folks, we'll put all those links in the show notes. So just look up above or down below, depending on the device. And remember, it's not about the knowledge you just got, because there was a lot of it. It's about you taking one or two of these pieces of knowledge and actually going out there and applying it. It's the only way you're going to get ahead. And it's the only thing that matters. So I'm going to test you one more time. I'm going to give you a copy of my book, Mapping Out the Millionaire Mystery, or any of my books. You can have them all for free. Go to chrisnaugle.com and go to the book section and just get them. You just pay the shipping and handling. So folks, thank you for joining us for another episode. Jerome, thank you for your time. I know you're out of job site, so get back to it, and we will see all of you next time.